Hello everyone, this is today's video analysis for March 12, 2019. Today we're going to take a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. As we start here on the daily time frame, we can see that currency pair has been in a downtrend for the past couple of weeks. We go to the top of the black trend line all the way up here into the mid 1.15s. Saw the first fall, first leg of the downtrend. Made a little bit of a rebound back to the 100 period moving average. Fell back down, new leg of the downtrend, new low. Came back up, 100 period moving average, and the black trend line right here into the blue shaded area where the blue circle is. We made a third third leg of the downtrend as it pressured lower, now making a new multi-year low, as you can see, pressuring through the low last time into 2018. So a new low all the way down here into the upper 111s, the blue zone at the very bottom of the chart. Past 3 days, Friday, Monday, now Tuesday, challenging into resistance. Now the orange shaded area here, 112.80, 112.60 is the orange zone. So we've made a little bit of a rebound. So the question of the day is, will we see the continuation of the downtrend, which is basically turning back lower again from this orange zone, or will the trend change and we start to look for it to go higher back above the orange zone? Orange zone obviously is our major area of decision. We've seen multiple decisions here before. We take a look back here where the black circle is. We take a look right here where the black circle is. These were support and support. And let's just grab this little green one right here and move it around here. So the green circle also shows support into that orange zone. So these three circles show support into the orange zone. Now, of course, we are underneath it as resistance. Anybody that's been trading for any amount of time knows that historical support can help us identify future resistance level. So that's what we're looking at here. Let's go ahead and zoom it in one time. Let's just take one fib, one simple Fibonacci retracement level from the last resistance high here, top of the blue circle, down to our current low. Interesting enough, the 0.382 Fibonacci retracement level lives right here inside the orange zone, 112.69, right smack in the middle of that orange zone. So again, that gives us some increased confidence, doesn't it? We have Fibonacci here, we have historical support here. We know that this orange zone is a major decision point for the euro dollar. It's a downtrend. All of those things lining up, I think, better for us for taking a short than a long today underneath that orange shaded area. So we're looking for opportunities underneath here. And the risk is simple. The risk is we don't want it to get above the orange zone. So our stop loss would be above today's high. How high above it will depend on your own personal risk strategies, but stop loss above today's high, above the orange zone. So how do you make that stop loss smaller? Should you bring it closer to the market, or do you put it at a logical place and wait for the market to get closer to that stop loss? And that's my opinion, is you wait for the market to go up, rally into resistance before selling again in the direction of trend. Is there risk that it breaks through the orange zone and goes back to the green zone and challenges the green trend line again? Yeah, I suppose there is the risk of that. If the dollar were to suddenly fall and tank again, we would look for that to happen. But right now, the overall trend is down. We're into resistance. No reason to buy it, but watching for reasons to sell it here. I like today's candle, the small body long wick on top of it. We'll see if it stays like that. Let's take it down to the 4-hour time frame. Again, here it is on the 4-hour, and I like this candle setup too, where we see a blue candle and then a sudden infusion of sell orders. That's what I talk about in the trade room quite often. If you're looking for a clue that the buyers and sellers are trying to fight back, this is it. We saw the buyers pressuring it above 112.80, and all of a sudden the sellers, boom, come right back in and drive it back under the orange zone. So this is increasing my confidence that we are looking for it to go back down towards the pink zone rather than break higher. The only thing I would have expected to see if it was going to go higher is that the market was able to get above the orange zone. Didn't do that. Now we're back below the orange zone. So I'm more focused on looking for it to stay underneath here. Of course, we have some news coming up, 8:30 a.m. Eastern U.S. time. That may affect the U.S. currency pair, but for right now, this is the way it looks to me. If this candle can stay under the orange zone, we have opportunities to go short, targeting, of course, first off, the pink zone, but beyond there, the blue zone at the bottom or lower within the direction of trend. The risk at this point is that the market decides to turn back around and get back above the orange zone, 112.80, for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.